Mandela FX ICT initiated. So this is a review of DXY EURUSD, the trade that we took today being 21st of May 2026, which is Thursday. So I have not been doing review with you people, but what happened today on the chart, it is something that I said I must review to you people. I must expose it to you people, show you people what happened before they trade over it. Because if I don't do it today now, if I say next week or I say weekend sometime, I get busy, and that is before you come back to the charts, the market has traded over that place over and over and over again. So I want to talk about this real quick before we think of doing anything next on the chart. So this is the setup of the trade we took. This is the screenshot I sent to the group. You can see what I have here. I was expecting this trade. It was, you see what I have, the demarcation and everything here. So my TP1, you can see here everything on the chart. I hope it's clear. You see TP1 level, TP2. So let's now see what happened. Did what I was expecting, did it happen? Now let's go to the next screenshots. Okay, this is the next one here, which is the after. The first one was before. You see what happened when we won this trade? This long candle here, this one here down, this was the candle that took us out of the trade. Then immediately that happened, what happened next? Now I'm not going to waste much time on this. I'll take you straight to the charts. They show you what happened to the EURUSD. The manipulation that took place. When I say manipulation, a lot of you don't understand. You say manipulation. I will now show you. I will show you one or two things in price, things that has happened before. I'll take you back, then come and show you what happened here today, exactly what happened before and how they manipulated it today. So let me now take you straight to the charts. Now this is EU on a weekly chart. This is EU on the weekly chart. Now I have few things right here. Before that, we took EU, and I want to show you DXY too, because everything I do is from DXY. Then this is DXY on a daily chart. I'm going to show you few things on DXY. Then I'll go back to EU. When I'm talking on EU, you will now reverse those things to DXY. So what do I have here on DXY? Look at it here. I have a daily fair value gap and daily volume imbalance. The yellow shaded area here, you can see how where I marked it from. See the place. Let me, before I've already marked it. Those of you who can see, you know what I marked there already. This is the level here. This is the volume imbalance. You know when it was created. Then the daily fair value gap that I just marked is here. So I will not do much time on that. These are the two levels I was working with this morning. So let me take you to a 4-hour chart. This yellow shaded area is a premium. This one here is a discount. So when price is, anytime price is trading here, is supposed to run down. Then let's go to a 4-hour chart now. Let me show you the real origin of the trade. Now you can see here, this is liquidity here, previous day's low. I will not be writing too much because I don't want this video to be long. So as I'm talking, you follow up, just follow up and share what I'm saying. This is previous day's low. All right, then it created a 4-hour fair value gap right here. This is it. Let me put it red. Okay, let me put it the color red. let me put it red color. The color is not dark enough. Okay, then change to this. Okay, now let me do this like this. This is a 4-hour fair value gap right here. So when as at well, let me do it like this. You see this? This is when this market was doing in the morning, where the market is right now. So as at that point, all these up candle were yet to form in the morning when market was trading here. So the plan, and with this fair value gap, with the volume imbalance I show you from the daily chart, if the market entered this place, it was supposed to come down and take this this low into this level. That was the trading objective. Now let's go now to EU. Everything here, this is the origin of the trade. This is what I was expecting this morning. You see this, all this up front to come and take this high. It was not expected. This 4-hour fair value gap you see right here was not withstanding price. As at the point when I sent message to the group, when I was saying that DXY was not responding, it was not respecting premium arrays, I said that. So this is the origin of the trade on DXY. Now let's go to EU straight, where we took the trade. Now this is EU. Everything I said on DXY, I'm going to show you the opposite of it now here. You look at this level right here. You look at this level. This is a daily, weekly fair value gap. This is a weekly charts. Pay attention to it. Now when I get down to a lower time frame, I will talk about it. You can see I've already named it weekly fair value gap. It is a bullish fair value gap that is supposed to send price higher. And you look at the first time price entered it, it took it up. So let's go to a daily chart. This is now a daily chart on EU. I have a daily fair value gap right there. This one you see, that's the fair value gap. I already marked it. You can see I've marked it and I've named it daily fair value gap. You can see it there. So now when you come to this level, I'm taking you straight to a 4-hour chart now, not to waste our time. So I had a 4-hour fair value gap right there, which is this one. You see this one? Pay attention to this level now. Let me put it yellow color. Let me put it yellow color. Okay. Now pay attention to this level now. In the morning, the origin of this trade, this daily fair value gap right here, that is a previous day's low. Then it created a 4-hour fair value gap when price entered there to take this low yesterday, like this. Then when that happened, it happened in form of SMT. When they took that low, when this low was taken yesterday. Now pay attention to that line. Then it created a 4-hour fair value gap. Let me mark it, the origin of today's trade. This is a 4-hour fair value gap, a discount one. The first one I marked here, the yellow one, is a premium one. Let me give this one a different color. Let me give it a different color. Give it a different color. Okay, this is a 4-hour fair value gap right there. Now when price was trading at that level in the morning, with what I told you on DXY, now if DXY was to respect its own premium fair value gap to run down, then this was the anticipation of price to go up. What was I expecting in that morning time? I was expecting this high. Look, this is a previous day's high. I'll mark it there. Let me just mark it and put a dollar sign. It is a liquidity. Let me mark it and put a dollar sign. It is liquidity. Okay, that was my target this morning when I took that trade. You can see the stop loss, this first setup I show you from here to this level. You see that's around 30 pips, what I was expecting. Then pay attention to this level now when I drop it to a 5-minute chart to show you what was happening in London. You see, when market open in London, this, let me put a demarcation for London, which is 1 o'clock a.m. New York time. 1 o'clock, yeah, this is London. I'll put a line there. Let me bold in it. Okay, you can see now the line is bold now. So now look at when price, I was expecting price to run into this level first before I buy it. Then look, when London open, sometime market has already entered, market has traded into this fair value gap small in Asia. This low you see right here, it was in Asia, but it didn't enter it properly. Sometime in London, when they open, the market will not come for this low, but a lot of time it come for that low before they go up. Then sometime when you wait for it, you will miss it. When I saw that, I went to get fuel in the morning. When I came back, I put on my jean. Then before I go back home, this fair value gap has already been created right there. You can see a 5-minute fair value gap right there. This was our entry. This is where I bought the market from. This level here. This is where I bought the market from. Then when I bought the market, just like I showed you from that first screenshot, my anticipation, what I was expecting for price to run from there to this high. Then my stop loss was here. You saw the stop loss, it was 20 pips. The reason why I gave that stop loss is because this is a 4-hour fair value gap. I know that if price will come to take this price can come to take this low right here that was formed in Asia. So I gave price space to do that, then run up. I was not expecting this long candle, this down candle to the downside. Now, I was watching how price will behave inside this 4-hour fair value gap. If it's not giving me what I want to give us instruction to close the trade, then that happened with speed. Look at what happened first. When I was looking at price, market was not respecting this 5-minute fair value gap to send price up again. I now saw a displacement like this. That displacement, it created another fair value gap. Look at the fair value gap there. That's the fair value gap. Then when price entered it, I was expecting price to come down from there small into this 4-hour fair value gap, then run up, boom. Before I could know it, they just dropped this long candle, boom. Then immediately I saw that with what has happened here, they did not respect this one again. Now market is coming down. What has already occurred to me is for them to come and take this previous day's low right here, this low that was formed yesterday, because that 4-hour fair value gap has already lost its strength. So let me put it here. Previous day's low, CESA liquidities. Okay. Previous day's low, CESA liquidities. Now, when I told people, immediately I saw this with everything they have done here. With this long candle, they were supposed to come and attack this low that I mark here immediately without wasting of time. That was when I told you people to sell EU, for us to follow this remaining run down to mitigate our loss. Remember, I told you people to use one TP for all. It was remaining around, from where we got in when this candle was forming. It was around 15 pips wrong to finish it. Then that will now give us the money that we have lost here from this trade here. This run down now will give us that money back to mitigate it. Even though we don't make it all, that will be a lost mitigation. Immediately we sold the market. The market now came back to come and take this London high again. And what happened here, this up run you see here, when I say manipulation, this up run you see here, this up run was never supposed to happen without taking this low first. The essence of price to show strength down like this is the interest is this low. It was not supposed to reject this low and come back for this high. Then when that happened, that's okay. I'm not going to do anything in price today again. Then look at what they did. When they did that, from the buy, immediately they stop us out. It ran to my TP1. Look at where TP1 level was. If you take that screenshot, you will discover that the TP1, my TP1 was this. This is Asian high. This high you see here. You can see that those high, that's my TP1 level. Then immediately they stop us from the buy market. From the buy market, it went straight to my TP1. Then TP1 of the buy. Then immediately that happened, it now went straight to the sell, the TP of the sell that we took. Everything that I was looking for in price today, all of them happened, but they did not allow me to stay in that market. When I say manipulation, you can see it. See it. After they swept that high, they came back. They swept the low, they went up. Look at how price was moving today. All throughout. Let me take it to a 1 hour chart and show you, or 15 minutes charts and show you. You see? Came down, went up, came down, went up. This is consolidation. And when in this consolidation, when market go into consolidation like this, that is where a lot of traders lose money, because the market will sweep every stop loss in the market. The price will sweep every stop loss in the market. So now, before I go, I want to show you people something very, very critical, and pay attention to what I want to tell you now. You see what price did here? This particular, this fair value gap, point it in your chart. Anytime you see price is going up and it creates a bullish fair value gap, and price violate that bullish fair value gap, it did not respect it and come down to create a premium fair value gap like this, then it run down, it run away from that place. Once that happens, that is to tell you that from my experience and everything that I've been doing, this high you see right here, it is the high of the day, and it will not be taken that same day again. And that place is safe to place your stop loss. Then look at what happened today. It was not safe. The high of the day, they came back to sweep it. They now came back to sweep the low again. They now went up again. Look. I just showed you. They now went up again. Then what I just show you here now, this fair value gap right here, what I just show you in this area here, what gave me confidence to sell that market, which is the second decision I made, it was because of what happened here. This high has already been defined as the high of the day to come and sweep this low, and I was also expecting to buy the markets from here after sweeping this low. Then they didn't do that. They went up. Immediately they came back. Or when I saw that market was trading here, it was wasting time I was looking to see another long candle. It didn't do that. That was when I told all of us to leave the trade inside this place. Then now look at this long candle here. When I tell you people that anytime I'm in a trade, if you really want to give you that, only that one candle on 5 minutes chart move 20 pips. Look at it. 23 pips, 24 pips. Now, how many people was my trade set up from here, this place? to this level, it was about 20 to 30 pips. So if this down candle was to be an up candle, that was how they were going to hit our take profit within 5 minutes for us. Then to back up what I just said, when I said anytime you see something like, I'm emphasizing on this level here, anytime you see something like this, I want to show you what happened on Tuesday exactly like this. Then it's telling you that this market does not have strength to the upside. Then you need to come down. That is what happened here. The signature, this is a signature. What I just showed you here now is a signature. I want to take you back to what happened on Tuesday to show you exactly the same thing like that on Tuesday, because we took a trade on Tuesday from here. Now, this is Tuesday price action here. You can go back, everything I'm showing you here. Tuesday in London, okay, Tuesday. It's still back here, it's back here. Tuesday, yeah, this is it. Tuesday in London, okay. Yeah, okay, now this is what I want to show you people. I can't leave this chart without showing you people what I want to show you now. Like I said, what on Tuesday when market open, look at this small run to the upside here. When market open here on Tuesday, you can go back to Tuesday price action and check what I'm showing you here. This is London. Let me mark London open, which is 1 o'clock a.m. New York time. You can see I just put the line there now. So when market open in London, just like I told you people that sometimes they will not come down before they go up, then the market was now going up. When it was going up, it created a bullish fair value gap, just like what happened today that I want to show you people now. It created a bullish fair value gap. That's the fair value gap right there. Now, this fair value gap, the work of it is a bullish one. When that up run happens, then as price retraced back to it like this, it was supposed to go back up. I was watching price that Tuesday before we took that trade on GU. I was watching price, I was seeing what EU was doing. Then price did not respect this bullish fair value gap again. It dropped down below it. That is what happened. That's what we call invergent fair value gap. Then that level now became an invergent. When that happened, it also created a premium fair value gap that will send price down from this displacement. It created a fair value gap. Look at the fair value gap there. Those of you who can see, this is a fair value gap. Then this is the second one. Sometimes it will enter that second one, but sometimes it will not enter it. Then when price entered this level back and dropped, that was when I gave instruction for us to sell GU, because I was more comfortable with GU. Then George now made mistake to sell EU. When he sold EU, I told him to close because I was not planning to engage on EU, but I was watching everything that was happening. So this high right here, this is the high of the day with what they have done there. They will not come back to take this high that very day again, because if the market was to go up, it will respect this level and continue going up. But the moment market now come down, look, this is a market structure break to the downside. The moment the market drop down to take this low, that is a market structure to the break to the downside. Then if price now retrace back to any fair value gap there, boom, look at what happened on Tuesday. Is that not what happened? Check, look, did the market come back to take this low that day? No. That was how we were bearish for the day. Then look at what happened today. The same thing that I just showed you, that was the same thing that I was expecting. As they were running, they were already going up in London when I bought the market from here. And anytime I'm in price, pay attention to what I want to say. Now, anytime I'm in price, when I'm doing something in price, I am watching every candle that is dropping. If price is not respecting my direction, I am waiting to see the next thing you want to do. Immediately I saw this run like this. When this run happened, automatically this is a market structure break to the downside now. proving to me that I am wrong to buy the market. That's okay. Then wrong being buying the market, this high now is being protected to be the high of the day. That is why I was confident to sell. Then look at what happened today. When I say manipulation, some of you don't understand it. If market is not manipulating, it's not supposed to go up like this, and be sweeping every stop loss in the market. What it's supposed to do, from my experience and everything I've been doing, is if you create a fair value gap, you enter it, you go, you enter it, you go, you enter it, you go. I'm not coming to be sweeping every stop loss in the market. Then let me now take you to a daily chart before I go. Let me take you to a daily chart. Daily chart now. Okay. Now you can see the full interpretation of it on daily chart now. Let me show you. You can see today's candle. It is not big. This is today's candle here that I want to show you. This candle here, this is today's candle. You look at how they traded. Came down, went up, came here and closed. Whenever you see this candle like this, that is a sign of consolidation. And when this consolidation is happening, manipulation takes place a lot inside it. And after that manipulation, a huge move is yet to unfold. When you see prices doing something like this, you go up, you come down. If you come down, it goes up. Anywhere you go, market sweep you off the market. Then anytime you see this thing like this, it is a sign. It is a sign that there is a big move that is yet to unfold. Because the market, first of all, want to scare everybody away. They want to take money from people enough before they deliver the price. That's what it does. Then, one of you on the group who traded with us today, he took this trade. This Byron here is my master student. He's on the group with us. But he sent the trade to me. He made 30 pips. This up run here, he took the trade on his live account. He sent to me. Then when I left the trade from here, I was not willing. When I left the trade from here, I was not willing to engage in the market today again because I've taken 2 losses in a day. And that is the maximum. And remember, I told all of you that I'm going to implement a lot of things to my trading, which I've been planning to show you people in the live. This particular review now is not a live review yet. I'm still planning to do that, where I will show you everything that I'm going to do. My maximum trade per day, any day I take a trade, once I lost that first entry, I will not make the second one again. Because if all of you check, any day I have a heavy loss like this, it is as a result of 2 trades, not 1 trade. I will get in the first time, get in the second time. If I lost the 2 of them, that moment, that is what become a heavy loss. If you check all my trade, 1 lost like that doesn't used to be big like this. But once I lose $201 today with my account, then somebody else too that is trading with the large account on a group, the same thing, that is a manner. Then those of you trading with small account, you lost 10, 6 like that. So these things that is happening like this, I am coming back for the market. Anytime this thing happen like this, like I always tell people, you don't learn anything from those trades that will win, those winning trading. They will have winning trade, people just happy and move on. But these losses, any day you take a lot as a trader, that is where you learn. That is where you learn. You learn nothing from those winning trades. So I'm back to the weekly chart where I started from. Let me take it back to the daily chart. I'm done with what I want to show you people here, how they did it today. Then the conclusion, what I'm trying to say about the loss. You see, in trading, there is no setup, there is no model that you trade. The best trader in the world, they lose money in trading. What I am trying to do, seriously, what I'm working on, hardly seriously, is I am trying to focus on one setup per week where, you see, my trade that I wanted to give you people this week was on Monday. It was around 100 pips, and we will not even get 100, anything 60, 70, we are done. Then we will not trade for that week again. These are the setup I'm trying to focus and frame. Then I'll sell one trade to you people on the group per week. I have my own account where I'm trading with. That company account, there's an objective on it. That one, I can take some other trade on it without sending it to the group. But my main objective now is to give you people one good trade per week. Then we'll go and rest. Some trader, you see what we did in the month of March, we made massive profit in March. Some trader, when they do that kind of thing, they will not trade that year again. But because we are trading with little account, we are just trying to be there every day. People who have large funds, they don't even trade every week. They don't trade every month. And consistency is the key here. This is something that I can never give up on. Time is coming where you will have large funds. When you take one trade per week or one trade per month, that money will sustain you all. Look at what I did in March. I made about $900. I was to withdraw that money from that company account because I had like $100 more to make to that account to pass the challenge in the first phase of it before I'll be able to withdraw on the second phase. Then April now gave us a heavy loss. 1st of April, we took a heavy loss. That was how I started drawing the account down. Imagine that was to be done with my live money in March. If I withdraw $900 and something in March, that's about ₦1 million. That is enough of money for my yearly achievements. So, in conclusion, what am I trying to say here? Anytime you see this thing like this, when I take this loss, I just smile. I learn from them. Then the only thing you can do is to try to limit how frequent you do it so that you can protect your profit. Because you have seen it. It's not like we have not been making profit. We have been making profit. And how this trade gave us that loss today is what I want to say now before I end the video. We were not supposed to lose up to that amount today. What happened is because of this long candle that happened with speed. I was expecting price. I was watching this level. You look at the midpoint of this 4-hour fair value gap. When this market entered this fair value gap here, and I was entering here, I was thinking they will be dropping price here. If price is wasting time inside this place, I will now tell all of you to close the trade. Then it didn't do that. Boom, with speed. That speed was what hit our stop loss. If it was not coming with speed, it wouldn't have gotten to this level before I will ask all of you to get out. If price failed to respect this level, then DXY too was not respecting its own 4-hour fair value. If you go to DXY, you're going to see the same thing there. Look at it here. DXY was not respecting it. Let me take it to a 5-minute chart. My network. Okay, now look at what was happening in London. See, this was in London. You can see this red shaded area here. That is their 4-hour fair value gap that I talked about. This long candle to the upside here. Boom. It was not supposed to come down deep, come up deep like that. And when that happened, there was a high there that was formed yesterday, which I marked the blue on EU. Look at this high. I don't need to write on it again, but this was, as they were not respecting this 4-hour fair value gap, that was how price was supposed to continue from here and run for this high. They didn't do that. Just like what EU failed to do to run for this low here. EU failed to run for it. But later, they came to do it after they have neutralized the people that sold the market. That's what they did. People that sold, they took them out. People that bought, they took them out. So this is the review that I want to show you people, and everything that I've shown to you in this video, you pay very, very close attention to it and learn from it. These are the things that I use as my stepping stones. Anytime such thing is happening next time, sometimes when you see me, I get out of a trade. When I get out of a trade and it comes to our stop loss, it is because of this losing trade that I learned from. And you see, most time when I get out of a trade, it will come back to our stop loss. So anytime I get out of a trade and it continue in my direction, I don't regret it. I don't feel bad about it because it's running and it continue going. No, getting out like that has been helping me a lot. And this one, the way it happened today, there was nothing I could do. Then we now had a loss today. Tomorrow is Friday. The way the market is right now, you can see now the market has closed here. So if you take it to a 4-hour chart, where it's trading right now, tomorrow I'm going to be watching price patiently, so everybody stay active. I'm not going to be rushing. We mustn't trade tomorrow. I'm only going to watch the price. If they do something very good that I know I can move price with, I will touch it. But if they don't do anything good for me to work with, I will not touch it. So this is a review for today. I remain Mandela FX, the Eagle Eye.